We got to the point where we had enough cash value in our policies and we said, let's buy a car.
When you have control of your money, you can dictate what you do with those funds. And the important thing about making money is once you have money, you can go and send it out to make friends.
Make friends and control and cash flow. We're not waiting to die and let our families cash out. No, we're going to use some of that money today so that we can flip it, we can make more money, and we can create the financial freedom that we've always dreamed of. What's going on, Wealth Nation? Did you know you can buy cars with whole life insurance? That's kind of crazy. We're going to dig into all of that today. My name is Carmen.
And I'm Darius. And of course, you can buy cars with life insurance because if you're on this channel, we talk about a concept called infinite banking, where we use our whole life insurance policies basically to finance our lifestyle.
Yep.
And you can do just that with your next car purchase.
So what we want to make sure that we focus on today is walking you all through the infinite banking concept, because we find with all the questions that we get, a lot of people only focus on the policy, and we want to get you guys outside of the policy. The policy is just the foundation. It's all about what are you doing with the policy that's really going to make the difference for your banking systems.
The policy is just the vehicle.
Ooh.
Since we're talking about vehicles.
No pun intended. It is just the vehicle. So don't get wrapped up in the splits and the death benefit and the cash value and this and that and the other. All we're saying is if you got $2 in your policy, right? What are you doing with $2? That's what we're going to talk about today. So again, one thing that I want to talk about before we go into the actual scenario of what we did is whole life insurance, infinite banking. What is it? And what is this thing that Darius and I always talk about? So basically what Darius and I talk about is a concept called infinite banking. And that is where you're going to take your savings, the money that is stashed away at the bank, and you're going to put that into a whole life insurance policy. The reason being is because we want to keep up with inflation and we want to be able to have control of our funds. We want to earn a guaranteed rate of return, and we want a death benefit just in case something were to happen to us. And we can do all of that just by moving our savings literally into a whole life insurance policy.
Right. Now, the important thing about savings is it's supposed to save you whenever you need it.
Yep.
And, on top of having enough money for your emergency fund, you also want to have money to invest.
Yes.
The amount of money that you have in savings to invest is the amount of money that we're talking about you want to put into a policy. Now, the policy itself is not an investment. It's a savings tool that we use, that we leverage, so that whenever we make purchases, when we make payments back to ourselves, we make payments back to ourselves, including the interest in which we would have otherwise used from a third-party lender.
And I don't know if you guys picked up what Darius said. We're talking about savings, not investing. Please do not confuse the two. If you don't know the difference between the two, then check out our channel. We talk about it, or look it up on Google. The only thing that we're talking about is moving your savings into a life insurance policy and then invest. We just want to have a little bit more protection for our savings. So in today's video, we're going to talk about car purchases. This is something that is really popular within the industry or the infinite banking industry. Everyone talks about purchasing cars, and we actually did it ourselves.
Right.
We got to the point where we had enough cash value in our policies and we said, let's buy a car. But backstory, do you want to... You want to tell the fine ladies and gentlemen of Wealth Nation how this came about? You
can tell the story, but one thing I want to say prior to us getting into the story is the fact that whole life insurance can be a ripoff. It can be a ripoff if you have whole life insurance and then it lapses and something happens to you and you don't have it. So that means you put money into something and you didn't use it. Now, what we're talking about using life insurance as a tool while we're living.
Yes.
Not necessarily and we wanted to have it for, for death benefit, but we also want to utilize the tool while we're living. And the reason why that's the case is because Fortune 500 companies, banks, our elected officials, they all use life insurance as a tool differently than most of us use it for.
Exactly. So if you're with us, go ahead and hit a thumbs up. Let's see some comments coming through, because we want to make sure that we get to questions at the end and interact with the audience. So to Darius's point, I love that you said that we are using whole life throughout our whole life. How about that? We're not waiting to die and let our families cash out. No, we're going to use some of that money today so that we can flip it, we can make more money, and we can create the financial freedom that we've always dreamed of.
Right.
So let's get into the story, shall we? once upon a time. So long story short, Darius and I were living in the Dominican Republic. And before the pandemic happened, we actually came to the United States and visited some family and actually kind of got trapped here because of the pandemic. And we're just hanging out with family. And we realized pretty quickly that we needed a vehicle. We didn't have a car on the island of DR. Uber was super cheap, so we didn't need a car. So while being in the States, we said, you know what, it's time for us to buy a vehicle.
And assume that we're going to be here for a long time.
Yeah, because ain't nobody going anywhere. So Darius and I put our numbers together. We came up with an amount that we said that we wanted to buy. And that amount was basically for us to buy a Tesla. We wanted to be energy efficient. We wanted to take advantage of the speed of the car. That was me. And we just wanted something new. We wanted something different. And Tesla was something that we wanted to reward ourselves with. Now, when I say reward ourselves, we talked about this on a previous video before where, we did well for ourselves, these past few years. And we were like, you know what, we don't tend to reward ourselves. So we wanted to do that with this vehicle. And I know a lot of us out there tend to do that and splurge from a financial standpoint. We did the numbers. We have the money. We're like, great, let's do it. And we ran it by our accountant.
Yeah. Now, the important thing, the reason why we ran it through our accountant is because it's not just us going through our finances. We have a team of people that specialize in certain aspects of our financial system, which is our taxes, our preparation, and then us creating the income and putting the team together. So we ran it past our accountant and he said, go ahead, get that car. If that's what you want to do it. But one thing he said that really, before he hung up, he said, don't buy a depreciating asset unless you can afford it. Now,
so one more time, don't buy a depreciating asset unless you can afford it. Click. That's literally how the conversation went. He was like, yeah, the numbers look good. You can do this, blah, blah, blah. And then he ended with that. And we're like, did he tell us not to buy the car?
So because he left us with that, we want to make sure we make good financial decisions. And the important thing about making good financial decisions is actually sleeping on it. Were we looking at this car because of
vanity,
how this material or how this vehicle would make us feel? Or is it because it was an actual good decision? And, we need a car to get from point A to point B because we have a baby now. We need to get to and from doctor's appointments. We need to get to and from the grocery store. So it's really important that we had a vehicle, but does it have to be a Tesla? Yeah,
exactly. And the one thing that we know, we preach all the time, but we're human, right? So we have to go back to our own advice sometimes. And we have to remember, rule number one, we got to be smart with money. Don't lose money. And then rule number two, don't forget rule number one.
Right.
So with that, our accountant left that nugget with us because he knew what he was doing. So we went back and said, you know what? Just because the money is there doesn't mean that we need to spend it. And I promise we'll get to the infinite banking piece of things. But just so you guys understand, how we come to these decisions, it's important for you guys to know this because, Darius and I, we have to have our financial meetings. We have to come together and say, what is the next purchase we're making and how are we going to make these moves?
Right.
So long story short, we decided, you know what? Why don't we split the cash? A Tesla is going to be close to $100,000.
Right.
Why don't we split the cash? We don't need a car that's six figures. It's the pandemic. Where are we going? Nowhere. So let's take half of that money and buy a car. And then the other half, we can put it into a cash flowing asset so that we can make money and not just dump the entire amount of funds into a car.
Yeah, like some notes.
So that
performing notes.
Yeah, that's where this whole thing came about. So long story short, we completely went off a different end. So we went from a Tesla to a Kia. We decided on a Kia Sportage, and I know everybody's probably like, "What?"
5-year warranty, factory warranty.
Not 5-year, lifetime.
Yeah, and
so
we're not trying to impress anybody.
Yeah, all we need is a set of wheels, and we swallowed that ego and said, you know what? We don't need anything crazy. We don't need anything lavish. And the rest of our money is out making money.
Right.
And that's the best thing. Well, both halves of the money is making money. We'll jump into that. But we created cash flow in two different instances from the same amount of money that we were about to spend.
Right. Now, the important thing about using infinite banking to make your purchases in general is you have the money back to use it again.
Yes.
So with the plan that we created for ourselves to make this car purchase, at the end of the term, we'll have the money again where we can buy a more expensive car.
Flipping it. Yeah.
And we can use the same payments. We can use the same car itself, because we'll not only have the money, but we'll have the car.
Yeah.
So we can sell the car, trade in the car, have more money added on top of the cash that we have in our possession from redirecting those payments back to ourselves.
Absolutely. So the man with the plan, of course, Mr. Britt, the numbers man himself, was able to finagle a plan for us with everything as far as the numerical breakdown and all how that all works. So long story short, when we decided on the car, we got a loan from our whole life insurance policy. We had enough cash in the whole life insurance policy where we said we can buy the car outright and we don't necessarily need to finance it through the bank.
Right. We had more than enough money to make the car purchase. Because one thing we do tell you is if you can't buy it twice, then don't buy it. So since we can buy 6 Kias, what we did is we went to the car dealership knowing how much money that we wanted to spend. And we had the conversation around we didn't know what we were doing.
Yeah.
So it's really important that whenever you go to make a purchase, you do your homework up front. You don't let anybody tell you how much money you want to spend. You go there ahead of time knowing how much money you are going to spend.
Poker face. Yeah. And the other thing too is we also understand how financing works, right? So we knew that the car dealership was going to try to get us to finance the deal so that they can make more money. Of course, they're in business. And we never said which way we were going. We never said if we were paying cash or financing. They assumed that we were going to finance the deal. And so when we got down and sat down and started talking about logistics and paperwork, and they said, how are you paying with this? And we said a check. They're like, oh, the price is different.
Thank you.
Oh, the price is different, is it? How much different is the price? So why is the price different, ladies and gentlemen? Because the insurance companies, the car dealerships and the banks make money when they finance deals. We all know that. That's what we talk about banking. They earn money in the interest.
Yeah. And when they can't finance the car, they charge you a fee for selling you the car so they can make sure they make money.
Yeah, that they make the money back. So it was basically $2,000 more that we were going to have to pay for the car. And so we were trying to negotiate it back down because we're like, we're giving you the money today. It doesn't make sense for you to charge us. You're about to have the money right now. So again, we knew coming into this what the expectations were. So that was just a little wrench that was kind of thrown at us that we assumed was coming, but it was something we had to work our way through.
Yeah. Now in that conversation, we also asked, what is the average interest rate that clients do have when they come and finance through your company? What is the worst interest rate or for us is the best interest rate? Is their worst? What is the worst interest rate that people have? And it gave us an average. And what we said is, okay, we'll come in the middle of that and we'll charge ourselves 10%. Now, 10% for a car loan is a lot, but when the company in which you're financing it through is your own, then that changes the conversation a little bit, because not only are we, making payments on this car, we also are making payments on this car with the intention of making a future car payment.
Yeah.
Right?
Yeah. Because the whole point of borrowing from your policy is if you're going to borrow from your policy for infinite banking, now the money is outside of the policy. This is infinite banking, right? So what are you doing with these funds to make money? We know that we got to charge ourselves more than 5% because that's what it cost us. That's what the insurance company is charging us for this loan. So we need to make it up. So we said, okay, if the bank said, the worst is 15% and the best is, 0%, 5, we wanted to come in the middle. So we said, we're getting a loan from our policies. If we had to finance this already, we're going to have to charge ourselves interest. So we looked at the numbers and said, it's going to be 10%.
Right. So the sticker price on the car and the actual cost of the car are two different things, because before you leave, you have to have insurance.
Yep.
And then they charge you to put to wash the car and put this gloss on it. They charge you to put little clear strips on the side of the car. They charge you to put the rubber on it on the doors. They charge you for the license plate.
Nickel and dime you.
They charge you for every single thing that can possibly be charged for on a car, but it's not included in the sticker price. So the sticker price for this car is $30,000, but after insurance and fees and the fee for paying cash, we ended up with about $41,000. So the exact number is $41,253.87 for a Kia. Yeah. It's a 2020. It was brand new, but $41,000 for a Kia. That's a lot of money.
It is. And I'm glad that you said that the car is brand new. We would have never, ever, 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 ever bought a brand new car. But with what we know with infinite banking and how we can make our liability an asset, we don't care what year the car is.
Yeah.
Because we know that we're going to make the money back and then some.
Right.
So that's a game changer when you are now in control of your financial freedom. You own your debt. You can do whatever you want with it. And so now we said, we like the tech package. So let's get the newest one that has the tech package.
Right. We need to make sure our baby is comfortable, make sure she can look up through the sunroof and enjoy the ride. Make sure we got the heated seats, the cool seats. So we made sure we got everything that we needed for our family.
Mm-hmm.
And what we did is we allowed our conversation to dictate what the amount of interest we're going to charge ourselves.
Yeah.
Because, we had to ask the question.
Mm-hmm.
We went there knowing exactly how much money we were going to spend.
Mm-hmm.
We asked the person that finances cars what the average interest rate is, and then we charged ourselves that interest rate. Yep. So the money itself, we just put it into our own promissory note. We created a contract for ourselves, and now every single month we pay ourselves $872.61.
Mm-hmm. Now that sounds like a lot of money for a Kia Sportage, right?
Yeah.
We bought a Kia Sportage. We're paying ourselves. We have the notes over here so we can tell you to the penny. The contract is right here.
Our amortization schedule.
$800. What? Who pays that for a car in general? Again, this money is coming back to us. This is money that was already going to be spent somehow, some way. We're just reallocating these funds and we're putting it back into our pocket.
Yeah. Now, the important thing to understand is, had we went to that car dealership without any money,
Mm-hmm.
Then we would have financed that same amount through the actual car company.
Yeah.
And the car company at the end of 5 years would have $52,356.
52 grand.
$52,000. Now, in 5 years, we have that $52,000 in which we can use to purchase another car. But it doesn't just end there, because we also have the car. So not only did we turn a depreciating asset into a appreciating asset by having the contract, we also have additional funds that we can add to our next car purchase if we trade in the car.
Exactly. 11 grand more than what we started with. And
Mm-hmm.
all we did was recycle money. We said, if the bank is going to charge us this, we'll charge us the same. And we're going to replace that money. That's the biggest thing about infinite banking is we talk about rule number 3, which is recapture or recover those funds. You better start paying yourself. It's one thing to talk about it. It's another thing to do it. So like Darius and I said, we had a promissory note to ourselves, and we said, this is the amount of money that's going to come back every single month. And now it's on auto draft, so we don't even think about it. So that's the beautiful thing about technology and everything that we can do with our banking system. And going back to the infinite banking piece of things, right? We said we borrowed the money from our policy. We borrowed $41,000 from our policy. And now outside of the policy, we are paying ourselves $800, $872 every single month. And we're going to do that for a total of 5 years, which is going to give us $52,000 back, right? So outside of the policy, we've earned $11,000 more. Outside of the policy, we've earned $11,000 more. So we weren't just sitting on the money and hoping for the whole life insurance policy to do all the heavy lifting. No, we weren't dependent on the splits or whatever people do to manipulate the policies. No, we said we have cash, we need to move it, and we need to figure out a way to do something with these.
Right. Now, also in my mind, if I'm controlling the direction of the cash, do I have to wait 5 years to use that money again? No, because we pay ourselves about $10,400 and something every single year.
Mm-hmm.
At the end of 2 years, we have over $21,000 that we've already paid to ourselves.
Correct.
Can we use that money to make an investment?
Yes. Yes.
Can we use the money at the end of the first year to make an investment?
3 times on Saturday.
And that's the whole point I'm making is when you have control of your money, you can dictate what you do with those funds. And the important thing about making money is once you have money, you can go and send it out to make friends.
Make friends and control and cash flow, 2 C's. That's the main thing that we are always focused on is the control. We took control by buying our own debt, buying our own liability, and now it's an asset to us. And now the control is when we pay it, how we pay it, where we pay it, right? Because if you go to the bank, you don't have any control. So God forbid something happens. We have a slow month, whatever it is. We can look ourselves in the mirror and say, hey, Darius and Carmen, you think you can make it up on the back end or make it up, pay a double payment, a specific month, whatever it is. We are in control. And that's the best thing about this whole thing of creating your own banking system is having the honest conversations with yourself and being able to have a flexible plan that is going to be profitable at the end of the day.
Right. And when you think about infinite banking, a lot of times people say, what type of investments are you making?
Yeah.
What are you doing with the funds? Well, what you can do for us, what we did is we started taking over our debts.
Yep.
Our debts.
Yep.
We became our own investment because all the third party debt that we had, when we started taking control of it and started paying ourselves the interest that we would have paid to somebody else, now we have more money in our possession than we started out with. Everything that we did started out from us initially. It started from Carmen and Darius, the expenses that we had, the debts that we had. And when we started taking them over with our life insurance policy, then we started expanding.
Yes.
Our knowledge started expanding because, when you think about your money sitting inside the bank, we're lending money to the bank to lend to you. So if we're already a lender, then we just need to become better at it. And that's exactly what we're doing within our own system. We're learning by applying the knowledge that we have on ourselves first.
Yeah, it's just all about recovering all of the funds that that's leaving your household. And we underestimate that. Gosh, we underestimated that. If you make $100,000, how much money do you have at the end of the year? Ask yourself that. I know what we had, and it wasn't a lot. Yeah. So what can you do? How can you reorganize your funds to make sure that $100,000, more of it remains in your possession than not?
Yeah.
And that's even after taxes.
Yeah. And even before getting into infinite banking, a lot of the things that we can do right now is the small things.
Yeah.
Like having a spreadsheet of what our expenses are on a monthly basis, having our income categorized or our expenses categorized so that, when something comes up, we know exactly what category to go into first. If we get a bonus check, we know exactly how to allocate those funds inside of our system because we have a spreadsheet that tells us exactly how every single dollar is allocated in our life.
Exactly.
Another thing we can do is everybody that's in that household is a part of a business. Your children are a part of the business. Your significant other is a part of the business. So everybody have to come together and understand what their role is in that business. Now, it may not all be finance. It may be some kids' role to make sure the trash is taken out. But it's the parents' role to go out and get the money. So the parents need to understand what the finances are looking like and be on the same page.
I like that. Yeah, we had those roles as kids, definitely. Now, for those of you who are probably like, why in the world did you guys decide upon this car? The biggest thing for us is safety, the features, and also the warranty. Right now, Kia and Hyundai have the best warranties in the business. And so that was something that was appealing to us. So again, whatever you decide is up to you, but don't hate because we've got a Kia. we know the stigmas with Kias. I think that's the main thing that we wanted to cover is understanding, right? We have the policy loan. What did we do with the policy loan and how are we bringing those funds back to us? All we did was create the same exact loan the bank would have done, but it's coming all back home.
Right. Now, when it comes to the notes that we create for ourselves or promissory notes, there's a website that you can use, Law Depot.
Oh, yeah.
That gives you different types of contracts that you can create. That promissory notes they have where you can create real estate notes. There's a variety of different notes that you can use in which we use for ourselves.
Yeah.
We have a subscription to lawdepot.com where we create our promissory notes for ourselves.
And this is not monetized whatsoever. We are not affiliated with Law Depot. We're just sharing it out of the gate. If you're trying to look for a quick promissory note, then just go on the internet and find one at Law Depot. Now we have more fancy ones that are looked through by our attorneys and things like that. But just out of the gate, if you need some piece of paper, then definitely look into that. And then if you're trying to figure out what an amortization schedules you can use, we definitely recommend.
It's also on lawdepot.com where you can create the amortization schedule also. So
exactly.
one-stop shop.
But what I was talking about is the type of calculators. If you're just trying to figure out numbers and get big picture things like that, then go to E, the letter E like Edward, Z like zebra, calculators. Again, not sponsored, that you can just do quick math and find any type of calculator that you need on there to help you figure out how you can make purchases and monetize them for yourselves.
Yeah, especially when you're trying to talk to someone and say, okay, I'm going to lend you this money at a certain amount of interest rate. Well, you can pull up your cell phone app and do a quick note and see how much you're going to charge them.
Yeah, we do that all the time. So let's go ahead and get into the comments. If you guys are still with us, please give us a thumbs up. Show that you're liking this video, that you appreciate the commentary and everything that we have here. So let me go into some of the comments that we see. What's up, Adam? Thank you so much for the love. What's up, Phil? We appreciate you guys. Hey, Harper. Okay, so I need to get my financial life in order. Hey, we get it. All it is a decision. Double fire.
Yeah,
double fire. Make the decision today to do something about it.
And one thing Carmen and I use is mint.com. It's a part of Intuit. For our business, we use QuickBooks, and under that umbrella of Intuit, they also have a free app called mint.com where we meet every single week and we talk about our personal budget, our personal expenses that we spend.
Again, not sponsored, but we just like these handy tools, so we figured why not share them with you.
Yeah.
All right, let's see what else. I love it. Making your money work for you. Absolutely. That's exactly what it's all about. Hello, Mr. and Mrs. Britt, loving the knowledge. Would it be possible for you to share your IBC tracking sheet? So really there's no tracking sheet. Like we said, it's an amortization schedule and looking at the calculators as far as how we figured this amount out. Now, if you are a client, we have solutions and opportunities for you. So if you are a client of ours, then just reach out to us because we can work through the numbers with you so you can understand how the motion of money goes and how you can maximize your opportunities there. Great advice. You're so welcome. Awesome. Like how life experiences and figure out ways to get the most out of infinite banking. 41K for a Kia. Yep, that's what we said. Good job that you got a 4Runner. I'm sure that it was worth that as well.
Yeah, we test drove. I actually wanted a 4Runner TRD. Test drove it, but a Kia was a smarter choice.
Yeah. What car do we get? A Kia Sportage. Let's see, Harper. IB is seriously the coolest thing ever. I thought of buying a new car and going this route to give you a peace of mind. Right, Harper? That's all we're trying to do. Thank you for the comments. Gotta love this again. Taking notes. Yeah, that's all it's about. So I'm looking, I think we just have love, which we appreciate. Thank you guys so much. Where in South Carolina are you from?
Yeah, I'm from Sumter, South Carolina. And a few years ago, Carmen and I, we went there and did a little seminar for the folks in Sumter.
Yeah.
But with, the pandemic right now,
we ain't going nowhere.
Yeah,
you're going to see us online. So look out for all of our YouTube videos. And also you can click on the link in this video below and check out our masterclass. For those of you who are interested in doing what we're talking about, infinite banking, click on the link below so that you can be a part of the Wealth Nation and start to create your own banking system for yourself.
Yep.
You will definitely meet with a member of our team and they will take good care of you so that we can make sure everyone can get on this banking game and take control of your finances.
Absolutely.
That's all we're trying to do. So let's see. I want to be a client. Please help. Click on the link so that you can join Wealth Nation, watch our masterclass, and then you will be prompted to apply to become a client at the end. What whole life insurance gives? Basically, what whole life insurance can you do this with? So King Bling, any mutual whole life insurance company you can work with, it is totally fine. What the thing that you need to make sure that you do is the design of the policy has to be very specific. So you need to have something called a paid up additions rider on this policy, and a rider is an add-on that is basically a bonus into this policy and allows you to have high cash value in the early years, as opposed to just a traditional whole life policy where you don't see cash until maybe 3 or 4 years, and it's pretty small.
Right. Now, your health can also dictate the life insurance policy itself, because of course it's life insurance, and they give you life insurance based on your health and your past. What do you call it? The past.
I'm trying to read your mind.
Sorry, they give you your health based on your family history also.
Yeah. Mm-hmm.
So if you are recovering from cancer or a cancer survivor, there's a good possibility you may not be able to qualify. So in those instances, you may be able to get a policy on someone else because you're not qualified to get a life insurance policy, where you can still do the same process, but maybe just not on yourself.
Absolutely. Yeah. If you have a pre-existing condition where you may not qualify to get a whole life insurance policy or any insurance, you are able to insure other people. So don't just stop at the front door and think that you can't do anything with it. There are options for you.
Okay. And man, I'm seeing a lot of people that has family in Sumter, South Carolina. Sumter. There you go. A lot of family in Sumter, South Carolina. That's so cool.
Yeah, I love it. So, thanks a lot. What's up? Thanks a lot. Thanks for joining us, sir.
Health, age, and medical history. Absolutely.
Yes.
Thank you, Dale.
Thank you. Thank you, Dale, member of our team, reading our mind for us. We appreciate you, sir. So thank you so much. I was wondering about that. You're absolutely welcome. And then could we please repeat again about the life insurance policy? So I think double fire, what you're talking about is what we were saying is you can work with any mutual life insurance company to ensure that they pay dividends or have the ability to pay dividends because it's not guaranteed. But work with any company and then make sure that you have a paid up additions rider, a PUA, that is added onto the policy, which is basically a bonus where you can get cash value in the first year as opposed to having to wait. So we design those policies all day long. So if that's something that you're interested in, then definitely click on the link below. We'd love to serve you so that you can make sure you get hooked up with the right type of policy.
Now, the whole basis of this is to control your money. When you have control of your money, you can do more things with it, and it can do more things for you. That's the whole basis of the conversation that we're having as far as what we did with our car purchase, but it doesn't have to be a car purchase. It can be something else. The first thing we did was we paid off a $2,000 credit card, which had about 20% interest. So that was huge for us because of the volume of interest in which we were paying that we now get to see in our bank account, which we can use that money again because we have control of it.
I'm glad you said that because a lot of people just get caught up on the debt. Well, hey, Darius and Carmen, I don't have debt. What else can I use my policy for? On our channel, we have a freebie that we give out all the time, which is called 52 Ways to Own Your Own Lifestyle. And it's literally 52 different ways you can use your whole life insurance policy. And it doesn't have to be debt related. A lot of it is on investing. So for those of you who can't figure out what am I going to use my cash for to make money in addition to owning my debt, then look at other investments and ways in which you can get some cash value, or cash flow your way. So I'm just going to look at a few more comments, see what we got. If you guys are still with us, please give us a thumbs up. We love the comments. Thank you for the interaction. Is there a specific carrier for whole life that you recommend? Any whole life insurance company will do.
A mutual life insurance company, preferably a non-direct recognition, meaning they don't recognize when you get a loan and they continue paying you the same amount of interest. Or dividend.
They don't hold your dividends. Don't let anybody try to coax you on thinking that one company is better than the other. Any mutual dividend paying whole life insurance company will work as long as you have the paid up additions rider on and it's designed for maximum cash. So let's say you guys are awesome. This is a lifesaver. You are so welcome. We understand. We first did this ourselves. And then once we became agents, we recognized just the gap in knowledge, the gap in education that there was. Not a lot of people knew about this and knew how to take advantage of their life insurance policies. So that's why we created this channel, just to shed light on what you can do with your money, because we can be creative at the end of the day. So let's see. The next one is, can you guys do a video on a HELOC versus IBC for investing? Ooh, that's a good one. We actually have a video on our membership community about HELOCs and using whole life insurance. So go ahead and click on the link below and you can join our community to learn about that. What we do, guys, just to make sure that you understand, on YouTube, we try to give as much general information as possible so that you guys can understand the basics of infinite banking. And then if you want to go into the nitty-gritty details, then that's where we say join our community, where you can see all the examples that Darius and I have done, other individuals that we know have done, our clients have done, so that you can level up your game and you can take it to the next level.
Yeah, it's really important for you to have maybe some type of spreadsheet so that you can see what story your money is telling you, so that you can be within that same flow. You don't want to go against the current. You want to go with the current so that you can have your money like really make some changes for you in your life.
Yeah, it's really a game changer. So what I want to make sure that you guys understand again, with all of this information, is with infinite banking, your policy is just the foundation. Do not get caught up in the cash value and the death benefit and the numbers that you see in your tabular detail on your illustration. Check the numbers, make sure that they're there. And then what we need to figure out is the plan of what you're doing outside of the policy. So many of you get so caught up in, oh, Carmen, when is my break even? When is this? When is that? What are you doing with money? That's the question that we always ask. What are you doing with the money? Because it doesn't matter when you're going to break even on the policy, because you see how much money we just generated from our cash by moving the money. We broke even way sooner than what the policy even deemed because we're moving the money.
Right. And we're having our actual payments that we make back to ourselves pay our premium. So we're not physically taking money out of our pocket to pay our premiums. It's the money that we're recapturing, redirecting back to ourselves that are not only repaying payments, but they're also paying our premiums.
Amen to that. So if you all want to continue learning about infinite banking and how this whole process works, we have a slew of videos online. So make sure that you check out our next video where we talk about infinite banking and how to create your own banking system. We appreciate you guys joining us on this live, and we wish you an amazing day. No, we got to sign off.
Remember to own your own lifestyle.
Or someone else will. If you have $10,000 in the bank today, we are going to tell you exactly what you need to do to flip that money for your benefit. My name is Carmen.
And I'm Darius. And when we say we're going to tell you exactly what you need to do, we're just going to say what we did with the money when we had $10,000 and how we got started in our business and how we've been able to prosper moving forward.